everybody, welcome to the Trading Market Technicals Morning Call video for Monday, September the 9th. Hope everybody enjoyed their weekend. On Friday we had a little bit of a wild ride, some crazy volatility. Non-farm payrolls were out, and markets were trying to decide if it was good or bad for our tapering discussion from the Fed. And sure enough, the market actually caught a bid. And then right around 9:45, 10 o'clock, there was a statement that President Putin from Russia said that he would back Syria if there were to be a strike. Now, that actually added some fear to the markets, and the market sold off into about 10 o'clock. Markets were up about 90 points at one point, and then sold off down to about 80 or so, and then rallied back, and then closed and sold off at the end of the day, closing basically flat. So pretty much a little bit of a wild ride, and this is going to be interesting this week. Now we got the event risk out of the way. We still have our possible confrontation with Syria, so that's going to be an ongoing thing, so we need to really be careful about that. But the good thing is that non-farm payrolls are out. We're going to see if this market is indeed going to rally, or are we going to continue to sell off. Now remember, we are in a short-term downtrend. I'll show you on the chart segment. We are in a downtrend channel, and we are at the upper end of the channel. Now, to me, if that were to hold, we hit that 4 times. There's no reason why the market should not hold unless we break out. Now, we did have some good China export numbers last night. That put a little bit of a bid into the pre-market session. We're up about 4 handles in the E-mini electronic session. So we'll just see if we get a little bit of continued strength and possibly break out of this downtrend channel. Now, if we do, we would be breaking bearish symmetry of lower lows and lower highs. So that is a good sign that maybe this correction may be over. Now, we don't know until price tells us. So we want to be prepared. But this week and going forward, I think between now and sometime in the middle of October, we could still see a good drop in the market, shake out a lot of the weak longs that have been buying up at these areas. Once that does conclude, then I do think that we're into a real good, strong year-end rally, because the weekly charts and the monthly chart looks pretty much fantastic. So I don't see much of a really continued weakness all the way into the end of the year, aside from some tax selling when you have the end of the quarter, and then of course the end of the year as well. Take advantage of some of that bad positions that a lot of the traders or investors may have. So that's interesting, but that's down the road. But let's concentrate more on the next 3 to 6 weeks. Right now, today is Monday, so we're just going to see what happens Monday and see where the market takes us, and then we can, I would suspect that we get some increased volatility. That's what I'm anticipating, and that's how we're going to play it. We're going to play it off the volatility, and that'll really tell us if we're going to be active or if we're just going to, again, be very selective in our trading, which we should anyway. It's just the market's now coming off of the summer, so I think a lot of market participants are coming back today, tomorrow, and we're going to see an increase in volume, and there'll be a lot of market plays at hand. All right, so let's go right into the. I got a couple of indicators. We'll go into the chart segment. Bullish percent SPX still in a downtrend, as you can see here. We had that one possible pop, and then it failed, and then that might be happening as well. We do have that 8 MA, that momentum indicator, momentum moving average, still pointing lower. Let's see if we get that hook back up and then possibly fail again. As you can see here, I'll show you in the chart segment, we are in a downtrend channel. Lower low, lower high, lower low, lower high, same here. So that's something that we're just going to keep an eye on. The indicators are really not telling, other than the fact that we are trending lower. As you can see here, there's the end of day tick. Lower high, lower high, lower high. Same here, lower high, lower high, lower high. Just didn't mark it with the circle. But as you can see, the good thing is we are still above zero. So if the market can correct and the tick be below zero, I'm sorry, stay above zero, and then start to rear back up again, that's going to be a great sign for the markets moving into the fall. Here's the NYMO. Right here in neutral territory again, and if you see, most of 2013 we've really been in neutral territory here, negative 30, plus 30, pretty much most, and then a couple of spikes back above overbought, and then a few spikes down below oversold. But right now here, just basically saying that, you know, whatever direction the market wants to go, it's got plenty of room before it's overbought and or oversold. So really not much really to say here. Now let's go and take a look at the VIX. Now the VIX was interesting. The VIX is actually catching the the confluence area of support, 20, 50, 200 on the daily chart. Took a big spike up and then, of course, sold back down again. Now, this to me looks like a nice little bull flag here. As you can see, bull flag, bull flag. And why do I say that? Because on the chart segment coming up, I'm going to show you lots of bear flags. So this is actually pretty valid. And when I see the inverse correlation of the equities versus the VIX, this is pretty much tells me why this would be a bull flag. So if the bear flags pan out, the VIX should move higher at least one more time. And that's going to be a great trade to sell volatility here. So once this market comes and we get a big pop like this and outside that band, that's going to be a great opportunity to sell VIX. So this is something that I'm going to be watching in the coming days and weeks. Okay, take a look at the U.S. dollar. Now, I am a dollar bull, and I definitely think that the dollar is going to move higher. But again, we want to get confirmation. We are now above the 20, 50, and 200, which is bullish. Actually, we're below the 50 as of Friday's close, but we're still above the 20 and the 200. Still bullish. Still above this area here. 82, 78, 83. If that takes that out, you're going to see a test of the highs. Now, if that happens, we're going to get a lot of the commodity sectors under pressure and probably equities as well. So keep an eye on the dollar. Dollar analysis is going to be really key, guys, here going forward. I'll be watching that during the day as well. Now, if that's the case and you want to play the dollar strength, look for the euro weakness. Now, we did get a pop in the euro because of the dollar weakness, and here's a nice big engulfing candle. I would love to see the dollar weakness and euro pop, an opportunity here for me to sell euros right around 133. Obviously, ideal would be 134, but I wouldn't want to get past 134. If we can get a 2 or 3 day big pop, maybe a nice little rally, and then fail, that's going to be the area where I would like to see the euro be, and then we would need a trigger. Remember that. We need to see the market start to fail in this area and start to roll back down again with a nice reversal candle taking out previous day's lows, and that's going to get you a trigger. Okay, but keep an eye on what the euro's doing. If you want to play the dollar strength, you could sell euros, euro dollar. Okay, now let's get right into see the daily gold. And gold here has another bull flag. 416 area was our target. We did get that over here in June. We got it again, and then we touched it ever so slightly and just sold off just about almost every day, never giving us an opportunity to sell gold. I don't like really chasing a setup, so I'd rather wait. Maybe we get another double test up at the 1416 area. That'll produce a small double top and then fail again. But we'll see. Right now, it is in an uptrend, making higher highs and higher lows, so that's a concern to me, looking to sell gold. But if we do get into this area and we fail again, that'll be my stop. They're easy to manage above this area. But we could see a big push up into the 50, which would give that 50% retracement into the 1490 area. Maybe that might be a better opportunity to sell gold. So we'll just wait and see. This is going to be a wait-and-see trade for gold. If you look at the gold weekly, you could see that you have a topping tails into the 1460 area. So we do have wanting sellers coming into this area here. Now, the reason why, and I get a couple emails, why you want to sell gold? Don't you want to buy gold? And, well, you know what? I'll tell you why. This is the real market leader in the metals, is palladium. Palladium is a big, big leader. It's a quiet leader, right? Nobody likes to look at palladium. They don't talk about it. But palladium is very, very weak. And if that's the case, also copper, which I don't have here in this segment, is very weak. If palladium maybe takes a back test in this area resists and fails and takes out this low, you're going to see a test here, and eventually you're going to see gold come off with it. So if you like to trade the metals, keep an eye on palladium. That is the big leader that nobody likes to talk about. That's the big guy. If that starts to break down, then I like to see. That's why I'm a better seller of gold than being a buyer, because it's just going to drag all the metals down with it. And if you have copper weakness along, it's just giving you confirmation that gold is indeed looking for lower prices until palladium can reverse. Now, if palladium reverses, obviously then I'm not looking to sell gold. I'll be looking to buy gold on dips. I'm a trend trader, and I like to stick with the trend. It's actually easier, and it's much more better following the trend than fighting it. Okay, now let's go into the chart segment. Here is USO, and I mentioned, USO here. We had a big, big jump up, and that's again for that war talk that we had with Russian President Putin talking about backing Syria. So, we could have this continue to rise higher. Now, this eventually is going to hurt equities if we continue to rise in WTI crude. Now, I don't have a shot in crude, but just keep an eye on USO. Again, for me, I'm looking for either some sort of a range above this area and then break out, or a pullback into this consolidation area here to be a better buyer in USO. I would not be shorting crude at all, but I look to buy dips in USO. Here is the GLD, and as you can see here, looks like a bull flag, same as the spot of gold. As you can see here, nice bull flag forming, and this is why I think we can break back out again, at least test this area. You can see the Bollinger Bands are starting to pinch. We're above the 50, and we're below the 200, but and above the 20. So a pop out of this might get a better opportunity to sell at higher prices in gold. That's the GLD. Here's the EEM. I would imagine emerging markets would be higher again today because of the fact we had some good China export numbers come in last night. So this might be a good area here to see what happens. Now, I'm interested in selling the emerging markets if we hold this area. Now, we had a big run, as you can see here. Big run, and we had a big push up early on, giving us a long-legged doji, which is an indecision candle, right? It's only now we need confirmation to close back below 39.48. If we can get back below 39.48, that would trigger a sell signal, stops it way above up in this area here. Let's see what happens. This might be a good trade for the week. And as you can see here, S&P 500 cash weekly chart, higher highs, higher lows, higher highs, higher lows. There's nothing wrong with this chart at all. That's why I say on the weekly chart, the longer term picture, meaning a few months out, I do think that the markets will rally going into the end of the year. I'd like to see one more flush into this market before we look to start really buying the market, start looking to build some positions. But again, looks indeed good to the upside. Here's the S&P Cash Daily. And this is what I was going to show you in the spiders. Downtrend channel. We touched, fell out, touched, fell down. 2 touches to the upside. Cannot break this downtrend channel, and that's the bearish symmetry that we have right now. If we can break this bearish symmetry and hold and start to move back up again, we might test the highs and actually go higher. Okay, so that's the daily chart. Here's the monthly chart of the spiders. Holding the upper end of the range here, so still bullish. So far, obviously the month just started, so you're not going to see much here. But I just want to show you on the weekly segment on Monday just to see where we are. Still an inside week from the previous week, so we'll just see what happens next week. Here's the Spider Weekly, same thing. Higher highs and higher lows in the uptrend channel, so nothing wrong with this at all. Here's the daily chart, and I just wanted to put some arrows in here. As you can see, we held this area 4 times. So now if we can break out of this area and start to really gain momentum, even base a little bit, and start to retest this 169, 170 area, I think you're going to get a good shot for a test of the highs here. And as you can see, we held, but we only held twice here. So keep an eye on this. This is actually really interesting. And what do you have? A bear flag within this pattern. Remember, now our momentum indicators are starting to point up again. We have not gotten across on the MACD, but if we get up today, if we're start to move higher today, we'll definitely get across on the MACD, triggering a buy signal. We have a buy signal in the stochastic, so looking pretty good. Maybe these bear flags fail. Again, we don't know until price tells us, so really keep that in mind. Today and tomorrow is going to be interesting, to say the least. Here's the here's this S&P 30-minute with the Bollinger Bands. They're starting to pinch again, so look for a move. We don't know which way, right? We don't know. The Bollinger Band doesn't tell you which way it is, direction that the move's going to happen, but just be prepared, because once we break out or break down, we should get some follow-through in price. Here is the diamonds, again, another bear flag. Here, as you can see, we've had bear flags after bear flags. And this here is definitely the weakest of the 5 that we follow, below the 20, below the 50. It is above the 200, but we have another bear flag here. So if we break below this, then I'd say look for the flush for the 200. And I think the 200-day is really going to be the target area, if not the June 24th lows, which will probably coincide nicely with the 200-day if the market continues to hold off before we start to sell off one more time. So just keep that in mind, guys. I think the target area is going to be the June 24th lows and the 200-day moving average. And as you can see here, Russell is obviously the strongest, almost one of the strongest leaders of the two, besides the Nasdaq. We didn't get quite of of a crossover yet, but this here is getting really close. We did get our crossover in our stochastics, getting a little bit of average volume here. We got a little bit of volume come in on Friday for that little scare. And again, bear flag again. So just keep an eye on this. This is interesting. You know, if the markets start to break down and they all follow, I'd look for a deeper downside correction. If in fact we hold these areas and sell-off is very limited and contained, then I'd definitely be looking for higher prices, guys. And this is what price is going to really tell us and dictate to us which way this market is going to be going. And again, right now, we are in a downtrend channel. You can see this, lower lows and lower highs. So we really need to break this bear symmetry. Bear flag again in the transports. Now, if crude continues to rise, yes, the transports can shake it off, but only for some time. And then all of a sudden, you're going to have a little bit of a sell-off in the transports, which probably will fuel the market sell-off in equities as well. Here's Goldman, another bear flag in Goldman. And again, I think that what you have here, higher highs and higher lows, basically in the downtrend channel here, we had that little bullish falling wedge that did not pan out. We did get a day or two of selling and then sold off. But here's your bear flag here, another flagpole flag here. So we are in a downtrend. We need to really break this bearish symmetry in a lot of the sectors in order for the markets to move higher. XLF. Banks and financials are actually really weak. That's not a good sign. We are breaking up to the upside of momentum indicators, so maybe we can catch a bid here in the banks. In a couple of days, the markets will in fact rally. So this is another sector to be watching. And here's Apple. Now Apple's holding it nice here. Apple has a meeting on the 10th tomorrow. If something really good comes out of it, that could actually fuel a good move higher here. And again, 505 is going to be the key. A break of 505, you're going to see that 518, 520. If we break below 485, you're going to see the market at least test the 200-day moving average. So Apple's in a range here. If we break 505, then it'd actually be a decent spot to look to probably get long. But again, you're going to have a big stop here. So it depends on how much you're looking to risk and what your trading plan is. Again, here's the Qs looking really constructive. Nasdaq definitely the strongest of the bunch that we follow. And if Nasdaq can hold up pretty well, might catch a bid on all the other sectors. All right, guys, have a great day. Enjoy the week. Have a great trading week. We'll see you tomorrow. Interesting market we'll have, and I think that in the coming days really gonna set the stage for the next few weeks. Have a great day, and we'll speak to you tomorrow. Take care.